Hello traders, welcome to the Wednesday trade recap and forecast. So this one is a bit later today, but we're still gonna do it, starting with the euro and the US dollar. I believe in the last recap this trade was running. It is now closed for 5.93% win. So a very nice trade, a very nice winner. Let me quickly run through it again. If you want to know more about this trade, check out my either last forecast or my last video, which is how I made 1,300 euros in 1 month. Okay, this was one of the trades. Ascending on the top right here. Reversal to the downside after the ascending, which is as expected. And then we have this signature momentum move, as you can see here, where we get a nice impulse down like this, one candle pullback, and then we continue to the downside like this or like so. Okay, then we set the order for a sell limit. All of the candles look very good, they look very large, they have clean closes mostly, and get taken in right here, and then follow the trade with the trailing stop loss management rule. Okay, so would I have taken a flag that formed here? I would, but since I was already in one trade and it was open risk, so it could have still reversed and took me out for a loss. I did not want to have double exposure on one pair, so I did stay out of this flag that formed, but it did fit my plan. If I wasn't in the first trade, I would have taken this flag right here. Okay, so yeah, followed it down and then took a nice profit on that one. Then we ranged around, broke the high retrace, broke the high retrace, broke the high retrace. Here I was definitely wanting to buy. I was seeing this nice pattern of, especially on the euro pairs, they like to do this sort of price action. So they have this ascending structure and then they impulse to the upside like so. Unfortunately, no entry formed, no valid entry, no high probability entry for me personally. What happened was a major selling pressure shift in the opposite direction. Was I looking for a flag right here? I was not. This was an ascending channel after which we do expect a reversal trend, but to me, this I did not like. Basically, V reversal, we could have just ranged around for a long time, so I did not want to take a straight trade right here. What I was looking for is, I was looking for a V and then a range and then a nice strong push down, which we did not get. So prices was kind of struggling to go down, which was not something that fit my plan. What I wanted to see, large, big bearish candles, and then I would be 100% looking for a sell setup. I was looking for candles that look exactly like these ones right here, large impulse down. Instead, we got these smaller candles and not really indicating much momentum, much selling pressure in the market. Currently, looking a bit range bound, broke the low, broke the low, broke the high here, broke the low again. I'm looking for a large impulse up or a large impulse down. What I'm expecting is a range bound market in this general area. Okay, Euro Japanese yen, I did have one trade. I may have covered it. I think I did in the last recap. Let's quickly run through it. So again, ascending channel right here, nice reversal in the opposite direction, definite signature selling pressure in these two legs, flag formation, and then we sell on this candle right here. Okay, ended up being a loss with a 12 pip stop loss, but was a really high probability trade, and I definitely would have taken this again, especially with this high probability prior price action. Then price was flat, descending right here. I was definitely looking for a sell setup at this point. This was looking very nice, breaking the lows, retracing, struggling to go down. Nice reversal, nice buying pressure, nice bullish momentum. Unfortunately, we got this candle which was indicating major selling pressure, and then I was no longer interested in any setups. Price continued in the end. On the top, was I looking to take this flag? So a flag that formed, this is the flag. First high, first low, second high, second low. blue candle, first bullish candle after the flag forms is the entry candle. I was not looking for a trade. Reason is too much selling pressure right here in these two candles. It's looking like, yeah, just too much selling pressure. It's looking like a major move down, especially when you compare it to the prior price action candles. So yeah, I really didn't like these two candles. If we have gotten a nice flag or a break and retest with no momentum shift, I would have taken a trade here. After this momentum, definitely I would have taken a trade. Unfortunately, we got these two candles, and yeah, after seeing that, I was like, okay, I'm not gonna take absolutely anything. I'm waiting for a break of the high or a break of the low. So that is exactly my plan. Expecting a large wider range and looking for a large push up or a large push down like this. Okay, so that's about it for EJ, Aussie US dollar. Flat, very flat. There was an opportunity to sell, which some people took, I believe it was Thursday. So last week on a Thursday, right here. Let's cover it. Let's see why some people took it. So they were possibly seeing a V reversal, bit of a range, and then a continuation down, which is exactly a pattern that we like to trade. Now here, breaking and retracing, but also correctively trending, which is a pair characteristic of the Aussie US dollar. Usually when it trends, it looks exactly like this. So yeah, just one candle breaks, but still pushing down and showing us zero buying pressure in the pullbacks. As you can see, the blue candles are really, really small. What I didn't like, why I did not take the trade. First, it was in the morning or during the night. During the night, I'm very careful. I'm a bit more picky, a bit more hesitant because my head is not working great during the night. When I wake up, my judgment is not the best, so I tend to be a bit more patient when I wake up during the night. I did see this trade, but what I did not like is this one candle. This one candle broke both the low and the high, and it had a big wick up and a big wick down. These sort of candles, in my experience, signal a range-bound market, especially when they break the low and the high. So I just did not want to take the trade because of this last impulse candle. Something was off for me. Maybe it would have been, maybe on a large enough sample size, this is a good setup, but yeah, I just woke up, saw this candle, didn't like it, and I did not take the trade. Would have been a loss. So with a 12 pip stop loss, I would have been taken out. Yeah, like this, and managed to avoid the 1% loss. I mean, is it really a bad trade? I would say it's not. It's somewhere between high probability and valid. So even if you took it, it's still a really, really good trade, and I would not be sad about it. For me, as I said, something was off and something just did not fit my plan. Well, I know what was off. So the last impulse candle was off. Okay, then we have this ascending channel right here going into a descending channel. And we're now flat, very, very flat in this general area. I'm not seeing any sort of potential. I'm seeing a range-bound market. What I'm looking for is a large push up or a large push down. So being more patient with the Aussie and the US dollar. Aussie JPY looks to be moving up. Was there any setup? No, there wasn't. I was not looking for anything last week. Then this week, you're moving in this ascending channel, correctively moving in the ascending, breaking the highs, breaking the lows, breaking the highs, breaking the highs again. So yeah, this looks to be possibly reversing soon. So what I'm looking for is possibly something like this, and then a nice reversal trend where I look to sell on the pullbacks right here. So let's see if we get that indication. Let's see if we get that evidence. And then we can look for nice sell setups once we get the confirmation of the downtrend. Okay, so AJ, was I looking to buy anywhere here? Well, yeah, here I was looking to buy, but Unfortunately, we saw major selling pressure, so very similar story to the euro and the Japanese yen. If you took a flag here, 12 pip stop loss, let's see it. Yeah, you would have been taken out. With a bigger stop loss, you still would have been taken out. So yeah, this trade was just not good enough, especially pair price action was looking ascending as well. So pair price action was not looking high probability for this particular pair. These types of formations usually work on the EU pair or the EJ pair. Okay, pound US dollar was in a trade and it was running very, very nicely. I'm out. Why did I take it? Same reason as the euro and the US dollar. Basically ascending structure on top of this formation. And then we get the confirmation, we get the signature downtrend, some heavy selling pressure occurring right here. And then we basically get our nice flag formation. First low, first low, first high, second low, second high. And the red candle is the NG candle. 20 pip stop loss. I did take this on a new timed entry, which I'm not gonna talk about too much. My friend and me want to keep it private for now, but basically I took it at the level of 1.21710, something like that. Okay, so this was around the level that I took it. Followed it with the trailing stop loss rule, and I was out for around 4% profit on this particular trade with a 20 pip stop loss. Okay, very nice setup, very nice trade, high probability, textbook, no-brainer. This is exactly what we want to see as a trend trader. Was there an opportunity to scale in? No, there was not. And now we're currently very flat, very range bound. So yeah, here in this area, I'm absolutely not seeing any sort of potential. Unfortunately, I'm just seeing a very flat range. What I'm looking for is I'm looking for a large push up or a large push to a downside. So I'm just looking for the price to get away from this range, show me an impulse up, show me an impulse down, and give me a nice trend, especially on the pound. I have been talking about this for a really long time. Pound, I want to see something like this. This is a nice move. So that is exactly the type of price action that I'm looking for, and we need to be really patient to wait for those types of moves, because if you're not patient enough, if you take these smaller ones, you will probably lose money on a large sample size. Okay, NJ, let's check it out. Last week I wasn't looking for any sort of a trade, didn't have any horizon on NJ. Let me check. Yeah, basically wasn't looking for anything. It was looking kind of flat overall, so not seeing much. Prior to that we were descending on a large scale. I was looking to buy right here, was definitely interested to buy, but then what we got is same as EJ, same as AJ. We got momentum shift, major selling pressure. After that, I am no longer interested in taking a setup. How do I know that this was a major shift? Well, you can just measure two candles, or you can even do it like this because they were consecutive, and just compare it to the impulse candles, definitely showing, and the pair price action, definitely showing major selling pressure, definitely a nice chunk of selling blocks. Okay, that is exactly what I do not want to see. What do I want to see for me to take a flag? I want to see no momentum shift. I want to see something like this, a nice tight flag that does not pull back much, or a small pullback like this one candle break of the high and then a retest of the high without any selling pressure. That is what I trade. Okay, so let's see the current price action. Let's see if there is any potential. Seeing a bit of a V reversal. Is it really clean? No, it's not. So I wouldn't count on it. When I say I want to see a V reversal, I want to see something that has same momentum going down and then same sort of momentum going up. So something that looks like this. And in the scenario above, which we see here, just delete this. Basically, we have small candles down, small candles going up, and then breaking the highs, retracing, breaking the highs, retracing, breaking the lows, retracing. Yeah, this does not look like a clean V reversal, so I would not count on it. How I would classify this as just a pure range, pure flat range. What I'm looking for, of course, large impulse up or a large impulse to the downside. Okay, so let's recap. Let's run through all of the pairs. Let me see what we can put on the watch list. EU, no, range bound. EJ, range bound. AU, flat, range bound. AJ, ascending. This one is on my watch list. I'm expecting a reversal trend like this, okay? And I'm looking to sell in the pullbacks. Pound, flat. NJ, flat. Okay, so the only one on the watch list currently is AJ right here. Okay, that's the only one. Now, this month has been really good. Usually after a big month, after some big winners, market tends to quiet down a bit. So we may have some nice winners, but maybe not as big as this month in October. Again, markets are not active all the time. There are some quiet periods, there are some trending periods. After a trending period, usually markets quiet down and we have that range bound period. So then we take some losses. What the key is not to lose all of your profits that you made in the trending period in the range bound period. That is exactly what happened to me. When I started to trade, I made like 30% in 1 month, and then in the next 4 or 5 months, I lost almost all of the profits. Okay, so you have to be careful. You have to not get impatient, not take shit trades after a big month. Your confidence does not need to skyrocket, because if it does, you'll start taking some crap trades and you'll lose all of your profits. That's it for this video. See you guys in the next one, next Wednesday. Let's see what the markets bring us. Again, I'm expecting a bit more quiet markets, but that is not the rule. I have to follow the charts. I have to trade accordingly. I have to follow the plan. I cannot get conservative just because I have a feeling that the markets are a bit range bound. Anything can happen, and let's be prepared. See you guys in the next week.